Hello, I'm David Cassidy with the weekly market summary for the week ending Friday the 27th of May. As you can see from the accompanying table, global equity markets ended the week and the month higher as markets finally appear to be appreciating that the equity market and economic crash we saw in February and March isn't like any of its predecessors, simply because the coronavirus outbreak, whilst horrible, is only a transient issue, and as a result, once economies are fully reopened, economic growth will recover rapidly and bring back most of the jobs that have been lost due to the coronavirus lockdown restrictions. Although the deteriorating US-China relations cast a big shadow over equity markets in the last couple of days of trading of the week, for example, the FTSE 100 fell 142.19 points or 2.29% on Friday, and the evening's late press conference by Donald Trump, 6:30 p.m. UK time, was mainly just tough talk as his actions were underwhelming and he certainly didn't throw down the gauntlet to China. He criticised China for passing new national security laws for Hong Kong and said that the US will take action to stop some Chinese nationals entering the US and would strip Hong Kong's special trading status. He did not pull out of the Phase 1 trade deal with China. Now, as we previously said, we expect lots of bombastic rhetoric from Donald Trump ahead of the presidential elections in November, and while this rhetoric is likely to keep equity markets on edge, meaning equity market volatility will remain elevated, it is unlikely to significantly hurt the current overall positivity surrounding the economic reopenings and potential coronavirus vaccine. Even though the FTSE 100 ended May with a 2.97% gain, it's the second straight winning month after a 4.04% rise in April. It is unfortunately still down 19.43% since the start of this year. Now, our long-term growth portfolios are diversified across a variety of asset classes, equities, fixed interest and cash, and geographies such as Europe, Asia and the US. And we have a disciplined investment process. And while, unfortunately, this hasn't stopped client portfolios from falling, it has helped to protect against bigger losses, as over the same period as the FTSE 100 is down 19.43%, a typical cautious portfolio is down 5.63%, balanced 10.18% and adventurous 8.30%. Looking ahead this coming week, once again our focus will be on the US weekly job claims data on Thursday, the 4th of June. Other key US data releases include ISM manufacturing today, Monday, the 1st of June, and employment data, non-farm payrolls, unemployment rate, participation rate on Friday, the 5th of June. We also have Eurozone unemployment rate, retail sales, and an ECB meeting where we expect the size of its pandemic emergency purchase programme to be increased given the deteriorating Eurozone economic data. Elsewhere, we have Chinese PMI data and, of course, Brexit negotiations enter June, with both sides talking discouragingly, and the 30th of June is the deadline for agreeing any extension to the transition agreement. Consequently, please keep reading or watching our regular market updates to stay on top of our thoughts and views for all these market moving events.